Have you ever wondered why a loaf of bread that cost a few pennies in the 1920s now costs a few dollars? Or why your grandfather's gold watch seems to be worth more now than when he first bought it? These phenomena are due to a concept known as inflation and the inherent value of gold. Inflation is the rate at which the general level of prices for goods and services is rising, and subsequently purchasing power is falling. Imagine having $100 today. In a year, due to inflation, the same $100 might not be able to buy the same amount of goods and services. This is because the price of these goods and services increases over time. Central banks attempt to limit inflation and avoid deflation in order to keep the economy running smoothly. But what does this have to do with gold, you might ask? Gold is what's known as a store of value. It's something that people use to transfer purchasing power from the present to the future. Gold has been a store of value for thousands of years because it has a number of desirable properties. It's durable, divisible, convenient, consistent, and has intrinsic value. You see, the price of gold tends to increase over time, just like the price of goods and services. This is because as more money is printed, each unit of money is worth less. Meanwhile, the amount of gold remains relatively constant. Therefore, as the value of money decreases due to inflation, the relative value of gold increases. This is why people often turn to gold as an investment during periods of high inflation. As the value of currency falls, the relative price of gold rises. Therefore, if you have money invested in gold, the value of your investment will increase as inflation increases. To summarize, gold is a good investment because it is a store of value. As inflation increases, the value of gold also increases. Therefore, investing in gold can protect you against the negative effects of inflation. Inflation is an important concept to understand as it affects the value of money. Gold, on the other hand, has been a store of value for thousands of years. As the value of money decreases due to inflation, the relative value of gold increases. Therefore, investing in gold can be a good way to protect your wealth against the negative effects of inflation. Remember, understanding inflation and knowing how to protect yourself against it is an important part of financial literacy. And gold, with its inherent properties, serves as a reliable hedge against inflation, preserving purchasing power for future use. So the next time you think about investing, consider gold, the timeless store of value.